Today we're diving into the top 5 stocks to buy in the month of March 2022. I spent hours of research going over hundreds of different companies, and I found a few that I believe to have huge growth potential this month. So if you haven't heard, Russia is sending troops into Ukraine and the market is taking a nosedive. In fact, the S&P 500 has now entered a correction for the first time since the pandemic. It's a volatile time in the markets, but there are still many opportunities to make money. In fact, buying now when prices are low is what all the big dogs in the stock market are doing, so will you be doing the same? Now, be sure to watch this video all the way through, as I'll be giving my full analysis on each of these stocks, and I'll be covering relevant news, significant numbers, price action of the stock, and my price predictions. As a disclaimer, I am not a financial advisor and my stock picks are not financial advice. This video is for entertainment purposes only, and this is simply a compilation of stocks that I believe will do well in the coming months based on my research. As always, make sure to do your own due diligence before investing your hard-earned money. Anyways, before we get started, please do me a favor and hit that like button, and if you're new to the channel, consider subscribing. I post weekly videos from my top stock picks to teaching you how to read stock charts, to my trading strategies, to personal finance strategies for nurses. You won't want to miss out on any of these videos, so make sure you turn on your notification bell as well. So without further ado, let's get into my top 5 stocks for March. So our first stock that I'm really liking this month is Upstart Holdings Incorporated, or stock ticker UPST. This is a company that uses AI to inform lending decisions. They recently beat estimates on earnings and they announced a buyback. Don't believe me? Well, at least Jim Cramer thinks that it's a buy as well. Although tech stocks continue to slide, we have seen a lot of them fall beyond correction territory. Upstart is one of those stocks. However, while a lot of tech companies are actually losing money now, Upstart is making money. In the fourth quarter of 2022, they generated a revenue of $304.8 million, which was up $86.7 million from the year prior. They beat estimates, which pegged their revenue at $262.9 million. In addition, they have plans for a share repurchase program of up to $400 million. These buybacks are usually initiated by companies when they are profitable and are used to help decrease the amount of available shares, which helps to increase share price. But that isn't all. There's more to like on their financial statements. Looking at the income statement, we can see that the net revenue has gone from $88 million in 2018 to $801 million in 2021. Next, we'll look at margin, which is an indicator of profitability, and here we can see that it is above our sweet spot of 40%. I love seeing this increase in research and development expenses in 2021, as we can see how much Upstart is invested in bettering their product, and this shows me that this is a company that isn't going away anytime soon. Upstart is also a low float stock with 83.7 million outstanding shares, and we figure that this number will go even lower with a $400 million buyback by the company. Institutional ownership would ideally be above 80%, but this is just one factor. We could easily see institutions start loading up, as this is an ideal buying opportunity with prices on sale. Upstart also has a relatively small market cap, which gives it great potential to grow. A simple 10x of the market cap to $100 billion would not only put it with the likes of Micron Technology and GE, but it would also rocket the stock price to at least $1,000. With a company investing as much as it is into R&D with a massive boost in revenue, especially in an environment where tech stocks are taking hits, it's not unreasonable to expect a 10x market cap within the next 5 years. They also have an attractive PB ratio of 13.48. Taking a look at the chart, we can see that UPST just broke through a previously held area of support here at $120. We're coming down to this line that previously acted as moving resistance and is now acting as support. If we continue to see prices head lower, however, we could look to this green line here as a level of support. If we can move back up to claim this area between 120 to 125, this would be ideal, because if we can see strength above 125, we could easily see UPST rally to as high as 140 in the coming days. Ideally, you could grab a long position at these areas of support with the option of either setting up a tight stop loss under these areas or setting aside capital to average down if it breaks this level. Experts have UPST as a moderate buy with an average price target of 213 with a high of 350. Given the price volatility of this stock, I'd expect UPST to hit that $200 mark within the next 6 months. Obviously, market conditions will dictate whether or not UPST will be able to hit these lofty price targets. However, I'll be trading this up and down. To keep up with what I'm seeing, I highly recommend following me on Instagram. I post tips and tricks from what I'm seeing in the stock market to personal finance tips and tricks that I tailor to nurses. So my next stock pick should be a familiar name to most of you, and it is Home Depot, or stock ticker HD. This company sells appliances, tools, lumber, and gardening products for everyone's home needs. Home Depot has been a top pick for a while and has made many millionaires, especially for those who invested a small amount in their IPO. Just days ago, they released their Q4 earnings and they beat estimates as sales grew 11%. However, part of this is attributed to gains from rising prices. In other words, people are not going as much, but they're spending more when they go. Also, supply chain issues have resulted in the company investing in their own supply chain, which in turn cuts into profit. They built a network of flatbed distribution centers that can process larger orders and deliver them directly to the construction site. Last year, their earnings per share grew at 30%, while they are saying that it will grow in the low single-digit percentage this year, which could be disappointing for investors. However, a key selling season for Home Depot in the past has been their spring, and their inventory currently is up 33%. Yes, of course we can contribute this to high prices, which leaves more inventory on the shelves, but I think Home Depot is hedging its bets that this spring will continue to be a strong buying season. Looking at the income statement, we can see massive year-over-year growth in net revenue. In 2018, Home Depot reported $108 billion in net revenue, while 2021 numbers jumped to $151 billion. Their margins are a bit under 40%, which can be an indicator of how a decrease in customers and supply chain issues have negatively impacted profitability. The company has 1 billion outstanding shares, an institutional ownership of 71%, and a $360 billion market cap. Home Depot has an attractive beta of 1. Taking a look at the chart, we can see that prices recently fell as they attributed some of their latest sales gains to rising prices. After extreme selling, prices have fallen near a key level of support. This level is at 300. I wouldn't be surprised if price fell a little more during the next few days as price attempts to find a bottom. This stock is one of my long-term investments, so I'm not expecting a quick move up. Experts have Home Depot as a strong buy with an average price target of $393 and a high price target of $470. Give this play time. The best case scenario is to buy this in your retirement account and to not touch these shares for years. I can see price moving up to this 400 level during the next year. My next pick is Rivian Automotive, or stock ticker RIVN. Some of you may have this EV stock in recent memory as the company just IPO'd in mid-November last year. Since then, investor hype has cooled off. Because of issues such as manufacturing and facilities, Rivian missed on production figures. They also announced the appointment of Tim Fallon to their top manufacturing position. For those of you unfamiliar with Tim Fallon, he has served for 15 years as the VP of manufacturing at Nissan. This move makes it clear that Rivian, despite its hiccups, is intent on meeting its current manufacturing goals. Several weeks ago, the company released a video regarding Gear Guard, which is a new autonomous security feature of their R1T, which alerts owners via notifications on their devices if anything triggers the car alarm. Also, this may or may not be true, but there is a rumor circulating that George Soros was holding over $2 billion worth of Rivian stock in his portfolio. We won't be able to look at our favorite key numbers within the financial statement since the company is not yet profitable and producing vehicles. So let's take a look at the price chart. Looking at the day chart, we can see that price has recently come off of its high at $179 and is looking to establish a solid base around this $57 to $65 level. I'd be looking to go long the closer price gets to $57, as this level could present an amazing buying opportunity. This will let you place a stop loss right under that level or give you the opportunity to average down if price action decides to fall lower. Our first stop will be at $77, but a break of that could open us up to $87 and $106 respectively. Analysts have Rivian as a moderate buy with an average price target of $133 and a high price target of $170. The next stock on my list is Chevron, or stock ticker CVX. During high inflationary periods, the top energy stocks usually tend to outperform. Not to mention that this stock also gives an attractive dividend of 4.1%. Research analyst Bill Selesky claims that in the current volatile energy environment, a company's balance sheet strength and place on the cost curve are critical and favor those integrated oil companies that are well positioned to manage a potentially long period of volatile oil prices. Chevron also benefits from healthy production growth, low operating costs, and a strong balance sheet. Let's take a closer look. Here we can see that their total assets is more than double their liabilities. Looking at the income statement, we can see that net revenue has been on a strong and very profitable trend since 2018, with the exception of the miss during COVID. Otherwise, it looks to have rebounded nicely in 2021. Chevron has 1.9 billion outstanding shares with an institutional ownership of 68% and a market cap of 257 billion. It has a very attractive PB ratio of 1.87. Looking at the chart, we can see that it recently broke through previous all-time highs and is sitting at an attractive level of support. We can see that it is sitting at this level of around 132, which has held a strong level of support in the past. Now, if we can get a bounce from here, we should have a move to first retest 139 and potentially go higher. Analysts have Chevron as a moderate buy with an average price target of 133 and a high of 170. My last stock for you all is Latch, or stock ticker LTCH. This is a new company that produces intercom, smart lock, and thermostat technology. Latch is currently based in the US, installing modernized door-mounted access hardware in apartments. Afterwards, the company signs up the apartment owners or renters for its subscription-based Latch OS software, software, which ranges between $7 and $12 per apartment per month. Their goal is to cash out on the profitability for the services it provides for that software. Bookings for Q3 of 2021 were $39.9 million in their hardware segment and $56.1 million for their software segment. Latch has already installed its hardware in 1 out of every 10 newly constructed apartment in 2020, which puts its cumulative booked home units to over 530,000. They have a relatively low amount of outstanding shares at 141 million. Also, institutional ownership is 66%, and they have a market cap of $755 million. They also have a solid PB ratio of 1.25. Looking at the day chart, we can see that Latch has been in a major downtrend. Have we found a bottom yet? I don't think so. However, this stock has reached highs of almost $20 1 year ago. This is more of a prospective play for us as this stock does carry risk inherently. Analysts have Latch as a moderate buy with an average price target of $8.71 and a high price target of $11.50. So those are my top stocks for the month of March. As always, remember to do your own due diligence on the stocks that I mentioned here. I've got a lot of faith in each of these stocks to do well in the coming months, but that doesn't replace doing your own due diligence on them to determine if they are the right investment for you. Also, if you haven't signed up for a Robinhood account already, go ahead, click on the link in the description below to claim your free stock. Ultimately, it's a win-win because you'll not only be supporting me and enabled to create more videos like this for you, but you'll also get a free share of stock as well. If you haven't already done so, please hit that like button and subscribe to the channel, and don't forget to tap that bell to get notified when I post a new video. Anyways, thank you so much for watching and happy investing. Peace.